to talk about Apple in a moment, but first, I want to dig a little bit more into the stuff that is happening with companies like Bed Bath & Beyond, BBBY, which again continues to generate a significant amount of news and a significant amount of interest. And we're down today 39% on a stock that is clearly going to go out of business. Now, mid-May is always an important time for me and for the markets, and there's a reason for that. This is the time that we get to look at 13F filings, and the big hedge funds will report, and we're paying attention to what the people like Buffett are doing. We're paying attention to what Carl Icahn is doing. We're looking at Stanley Druckenmiller. It's historically a really great opportunity for some of the best stock pickers to, really show their grit, to show, that they went in and they dug through companies and they started to make key investments in different names. And I remember going back in the day, going to a conference and being really interested in what Bill Ackman had to say about Chipotle, because he had taken a big stake in this company a few years ago, back when it was way down here. And I was interested in that because I read about his stake in this in a 13F. So he took a big stake by betting on steak burritos. Okay, so at the company, through innovation and its great leadership, they created a great brand and they grew solid fundamentals that built a sustainable business. And this is important because that's how this is supposed to work. This is how the world of finance is supposed to operate. It's supposed to rely on good money, investing in great businesses, strong fundamentals, great financial discipline, real assets. Well, good news, everybody. We can throw that out the window now, because 213F filings show that actual business models don't matter anymore. Only insane day trading models matter. AI is what matters, and it all fits into the world's meme craze. So here's what I want you to know. Yesterday, we saw the filings of Ray Dalio's Bridgewater Associates, and one of the largest, if not the largest fund, was buying and trading GameStop. GME, once again, the meme craze stocks, things going from 19 to 22 that are completely unprofitable and trading at outrageous multiples and really have no business being where they are. It was also buying AMC. AMC, another crazy meme stock. These two stocks are the most notorious of the meme stocks, going back to when this whole thing began. But it gets worse, because one of the best performing algorithmic hedge funds of all time, Renaissance Technologies, was going into Bed Bath & Beyond. Now, what does that tell us? This is a bankrupt company. This company's not going anywhere. It's not even showing up on FinViz anymore. And they were also buying Tesla. And we talked a little bit about Tesla today, but Tesla has outrageous multiples heading into a recession. They also are going to face significant costs and a lot of other challenges as we have to expand the massive grid in order to accommodate these organizations. Now, maybe they see what I see in Tesla, and I see a long-term arbitrage energy company that's going to be able to move electricity from a new grid to batteries and then sell it back to the grid. But that's 20 to 25 years away. And what this actually tells me is that all of these big funds are moving into a world of pure momentum trading without any interest in the underlying company or its business survival at all. And I want to warn everybody, because this is a warning sign of something worse to come. And it is a tacit admission that it is no longer about building great companies in the United States anymore. It is about playing a casino. It is about the hope that you're not the last person holding a bag of these zombie stocks when the music stops and these companies are ultimately delisted and thrown into the dustbin of history. And you're watching the smartest funds in the world now preying on the suckers, and that is brutal to watch. And I'm not going to sit here and trade this stuff. I want nothing to do with it. But I will focus on good companies with good balance sheets, things that matter, real assets. And as we continue to watch stuff that has good earnings growth, strong cash flow, strong financial discipline, we're going to continue to trade those names, and we're going to focus on those names for the next 18 to 24 months. And our hope is ultimately this nonsense does go away. But I have to state, I'm not terribly optimistic.